So from watching our videos, if you thought you've seen all the ways that somebody can embezzle for your company, here's a new one that you may not have thought of, and it's embezzlement using tax payment fraud. If you have a bookkeeper or outside party that is making payments to the IRS for your withholdings for your employment taxes or for your corporate taxes, you're going to see transfers to the IRS, either by check or by money transfer, wire transfer. So if you see those look legitimate. It's not a fake vendor. It's not somebody who's not supposed to be getting the money. But if payments are made in excess of the amount that's supposed to be, overpayments, or made separately beyond what covers what's been withheld from your employees, that money can be diverted to another tax account, meaning that if, let's say, your employment taxes are withheld and used to fund the prepaid accounts of all your employees by their Social Security numbers, what if your bookkeeper is sending an excess amount to his account? And at the end of the year, he can request a refund for that overpayment. This is not readily apparent on your balance sheet or not readily apparent from your accounts payable. You see a tax transfer to the IRS or US Treasury, that looks legitimate. You have an amount given to you by your bookkeeper. You're not going to know what that amount is correct. But if an extra $500 or $600 or $700 every pay period is sent as an overpayment to the tax account for that bookkeeper's personal Social Security number, he can request, or she can request, a refund at the end of the year for that overpayment. It's mixed in with your regular tax payments. It's not going to be readily available. This also works for other legitimate vendors. Maybe your insurance company. Maybe you have an insurance policy with Chubb or Allstate. What if payments are being sent to that company to pay for another policy? What if overpayments are made for health insurance? Keep in mind that unless you do a full audit and accounting of what amount is supposed to be sent, that you'll never recognize this. There was a recent case for a bookkeeper in Idaho who had sent over the years $450,000 in excess payments to a fake account for a corporation that happened to be his corporation, and all he did at the end of the year was request a refund for those overpayments, and he profited for several $100,000. So a careful audit of your company's tax payments to make sure they're being applied to the correct accounts, whether intentionally or not, can keep you from losing that money and having to repay it later if they're not applied properly.